I bet you didn't know that the Chevron logo you see at your local gas station is just the tip of the iceberg. This company is massive, one of the world's biggest integrated energy companies. Exploration, production, refining, marketing, they do it all. Think oil, natural gas, and even venturing into renewables. From drilling deep water wells to powering your car, Chevron's reach is global. They're a major player competing with ExxonMobil, BP, Shell. Been around for over a century, weathering oil booms and busts. Headquartered in California, but operations span the globe from the Permian Basin to Kazakhstan. Chevron's a behemoth, a titan of the energy industry. Listen up, because we're about to break down exactly how Chevron, one of the world's energy giants, turns black gold into real profits. This is the story of how money gets made in the oil business, and why Chevron is a key player in the global economy. Chevron's business model is straightforward but powerful. Find oil and gas reserves, extract them from deep underground, and transform them into products we all use every day, like gasoline, diesel, and jet fuel. The process starts with exploration, then drilling, pumping, transporting, refining, and finally selling those products at gas stations and to industries around the world. Every single barrel of oil, every cubic foot of natural gas, and every refined product sold adds up to massive revenue streams for Chevron. But here's the catch: oil prices are always on the move. They rise and fall with global supply and demand, political tensions, and even natural disasters, making the business a constant roller coaster. When prices are high, Chevron's profits can skyrocket. That means bigger dividends for shareholders, rising stock prices, and plenty of reasons for investors to cheer. People invest in oil companies like Chevron not just for growth but also for steady dividends and as a hedge against inflation, since energy prices often rise when the cost of living goes up. The oil industry is famously cyclical, with booms and busts, but through it all, Chevron has managed to remain a consistent performer, delivering value to its investors year after year. Let's talk numbers, people, because that's what matters. Chevron's recent performance? Strong. Profits up, driven by higher energy prices. They're returning cash to shareholders, juicy dividends, buybacks, the works. Their balance sheet is solid, less debt compared to some rivals, a sign of financial strength. They've been paying dividends consistently for decades, a track record that's music to income investors' ears. The dividend yield might fluctuate, but Chevron's commitment to shareholders is clear. They're using their profits to reward investors and strengthen their business. That's what we like to see. Oil, it's a roller coaster, we all know that, but Chevron, they've been through it all. They've got the experience, the scale, the diversification to weather the storms. Compared to smaller, more niche oil companies, Chevron's a battleship. They're less impacted by single events, more resilient in the face of volatility. Now, nobody's immune to oil price crashes, but Chevron's got options. They can adjust production, cut costs, and leverage their integrated model to navigate tough times. They're not a get-rich-quick scheme, they're a long-term player, a pillar of the energy sector. Listen, no investment is risk-free, and Chevron's no different. Before you put your money into any stock, especially one in the energy sector, it's important to understand the unique risks involved. Chevron, as a major oil and gas company, faces a set of challenges that can impact its performance and your returns. Oil prices can be unpredictable, demand can shift, renewables are on the rise. The global energy market is constantly changing, and Chevron's profits are closely tied to these fluctuations. When oil prices drop, so can Chevron's revenue, and when demand for fossil fuels falls, it can hit the company hard. These are factors, folks, factors that can impact Chevron's bottom line. Even small changes in the market or shifts in consumer behavior can have a big effect on the company's financial health. Then there's the environmental concerns. Oil spills, pollution, and carbon emissions are all risks that Chevron faces, and these can lead to costly cleanups or lawsuits. Climate change is real, and fossil fuel companies are under scrutiny. Public pressure is mounting, and more people are demanding cleaner alternatives, which puts additional pressure on Chevron to adapt. Regulations are tightening, and the world's transitioning to cleaner energy. Governments around the globe are introducing stricter rules, taxes, and incentives to reduce carbon emissions, which can increase costs for Chevron and limit its growth. Chevron's investing in renewables, but it's a long game. Shifting from oil to clean energy takes time, money, and innovation, and there's no guarantee of success in this competitive new landscape. For some investors, These risks are a deal breaker. They might worry about the future of oil, or about the ethical implications of supporting fossil fuels. They want nothing to do with fossil fuels. Instead, they choose to invest in companies that align with their values or that are focused on sustainability. And that's okay. Everyone's got their own risk tolerance. The key is to be informed, weigh the pros and cons, and make the choice that's right for you and your financial goals. So, is Chevron a buy for beginners? That's a question a lot of new investors are asking, especially as they look for reliable companies to anchor their portfolios. With so many choices out there, it's important to know what makes Chevron stand out and what risks you need to consider before making a move. Here's the deal. If you're looking for a stable, dividend-paying company with a long track record, Chevron is definitely worth considering. They've been paying dividends for decades, and their commitment to returning value to shareholders is a big plus for income-focused investors. They're a giant in the energy sector, and their financials are strong. Chevron's size and global reach give it a competitive edge, and their balance sheet is one of the healthiest in the industry, which can provide some peace of mind during market turbulence. But remember, the energy landscape is changing. The world is moving toward renewables, and oil companies like Chevron are under pressure to adapt. This transition could impact future growth and profitability, so it's something to keep on your radar. Oil prices are volatile, and environmental concerns are real. Chevron's profits can swing wildly with the price of oil, and new regulations or climate initiatives could affect their business model. These are real risks that every investor should weigh carefully. If you're uncomfortable with these risks, there are other options. You might want to look at companies in sectors less exposed to commodity swings or environmental scrutiny, like technology or healthcare, depending on your goals and risk tolerance. But if you're looking for a solid company with a history of rewarding shareholders, Chevron might just be the ticket. Their consistent dividends and strong market position make them a favorite for many long-term investors. Just remember, do your research, understand the risks, and invest only what you can afford to lose. Every investment comes with trade-offs, so make sure Chevron fits your personal strategy and financial goals. That's the Mad Money way. Stay smart, stay curious, and always invest with confidence.